Okay, hello guys, welcome to part two, the follow-up on this webinar about COVID-19 small business support. So we are going to continue to ask and answer, hopefully, your questions about all the support schemes that are open, the grants, the CBIL loan scheme, which we're starting to see people come through now. We've had quite a few different members and mine and Ian's community's been approved. So we're going to talk a little bit about that and we're going to answer your questions. So feel free, if you're on the live call, if you've made it to the live call, I'm seeing a few familiar faces there. Hey, Darren. Hey, Mark. Hey, Paul. Hey, James. Hey, Ewan. Jump in the chat, post questions as we go. But probably a starter for 10, Ian, well, first of all, I should probably reintroduce you in case people weren't on last week's call. So, Ian, welcome to this call. I know we've worked together a little bit in our mastermind program, but tell people your background as to why it's worthwhile. You might have something sensible to say on this call that could help them.
Yeah, thanks, Dan. Hi, everybody. So I'm Ian, and I run a firm of accountants, and we specialise in helping and supporting small businesses. We've got quite a large number of clients that we're sort of looking after and making sure that actually we've been keeping up to date on everything that's going on in these sort of unprecedented times. There's lots of data out there, lots of fake news and lots of rumours and things. So we've been making sure that we're keeping on top of it, and hopefully today we can dispel any of those myths and make sure that you've got full facts and information that you can take action upon.
Very good. Well, so let's start from the top and then we will pitter-patter around as we go. But since we spoke a week ago, Ian, when we had the previous version of this webinar, back then there wasn't, I don't think, while it had been announced and people have been applied, I don't think either of us had had any clients approved for the CBIL loans. In the last week, because this is moving so quick, there have been an awful lot of people that are getting the grants through, and then there seems to be movement started. I know within my private clients and mastermind, we've had over £1 million worth of funds distributed. So not just loans approved, but actually funds distributed and received. So let's start with the grants, probably, and it's probably going to be a combination, Ian, of recapping on the basic, but also if there's been any additional insights. Recap first, what grants, if somebody's on this call and they're a small business, what are they eligible for? What should they consider applying for?
Okay, yes. So the current setup is that if you haven't done so already, you've got access to the support grants for those people who've got business premises. So there's two levels of those. If you've got small business rates relief, then there's a grant for sort of £10,000 that you can apply for through your local council. And then if you're in the sort of hospitality, retail, and sort of leisure industries, then there is the potential of an enhanced grant as well that goes up to £25,000, depending on your rateable value. We've then also got grants available for self-employed businesses. So that's specifically those who are sole traders and partnerships. This isn't bringing self-employed as limited company directors, that they're not caught under that same umbrella. So we've got grants available for them. And there's some enhanced grants for, I think the Welsh community have got some enhanced grants that they can access and get availability to as well. And that's being fed out to people who are within Wales. And then you've also got the furloughed grant as well for if you've got, it's effectively a job retention scheme. So if you've got the position you're going to make staff redundant because of this situation, then the government have then put grants in place to help you support that. So you don't need to actually be making people redundant.
So let's jump in on the business rates scheme first, because it seems to be quite a mixed bag. Some people are getting their grants approved, so you apply via your local council. So for me in this area, it would be Warwick or Warwickshire District Council, and they are you apply online via their website, and things seem to be getting ticked off and approved within 24 hours and funds distributed within 72 hours in cleared funds. But yet some other councils seem to be taking a huge length of time. What are you seeing, Ian?
Yeah, we're seeing a very similar experience. So we've got, obviously, as most people, we've got a few local councils you probably covered with your clients, but that we're sort of experiencing, certainly Gloucester City Council, from where we're based, theirs is a very good online system. I've seen people, yeah, within a couple of days, that from literally from point of application, that's it, money in the bank and sorted. Another local council of ours has then just got a form that you effectively need to download, and you fill it out and you need to post it off to them. And that's seeing lengthier delays in terms of when things are approved and when funds are available. So yeah, there is a bit of a mixed bag. Some people I've heard about in Northamptonshire, they didn't necessarily make it clear that there was an availability on their website. They almost created confusion. They had two sections on their website, and it was posted in a different section, even though they'd posted about it in another section. So people hadn't been claiming. So my advice is basically go to the main website and do search around. You may find there's some access somewhere.
And it does seem to me that at least the funds are starting to flow. So even the people that have applied weeks ago, you will be in the queue. So, and the reason why we're talking about grants first, of course, is because that's money that you don't have to give back. But a question we did get asked, Ian, and for those that are on the call, you can ask us questions live now, and I'll do my best to work in. So I'm just looking at one from Stuart. But a question we were asked earlier prior to coming onto the webinar, Ian, was, are these grants taxable? So is the grant income, will we be taxed on these grants?
So yeah, effectively these grants are taxable. So they are, in effect, they are a refund of your rates. And even if it's the case that you've got small business exemption and you haven't actually been paying rates. So they are completely taxable. You're not going to pay VAT or anything on them. But if you had a small business exemption, you weren't paying any rates, and you receive a £10,000 grant, then depending on your setup, then you're going to have some degree of tax on that, either at 19, 20 or 40%, depending on what kind of setup you've got. So they are taxable. Do expect that you're going to have to put some of that aside. Timing wise as well, because a lot of these grants have been received or been applied for prior to the 5th of April or 31st of March, a lot of people are going to have this tax liability in their next tax payment. Right. So the tax is going to be due likely within the next 9-10 months time.
Okay, good. So let's jump from that scheme. Let's talk about furloughing briefly. And I know there's a lot of questions about CBILS. A lot of people that are angry, but then there's also some success. So we'll try and, I don't want to say shed some light, but share some information with which people can make better decisions is probably a better way of putting it. Let's talk about the furloughing scheme. And effectively this is free money, or it's free to the business owner. So as a headline, just in case people have been hiding under a rock, Ian, what is the scheme? And then we'll probably get into some of the tweaks and changes that they've made in the very recent past since we've recorded the last webinar. So what is the scheme, just to make sure that people understand it and the basic ins and outs?
Yeah. So the basic principle of the scheme is, if you've got stuff that effectively you would be laying off in the current circumstances, to prevent you from doing that and creating a mass sort of unemployment within the UK, then you have this job retention scheme whereby you can retain those people, put them in a position where they are not working, and that's a key element. They should not be working at all. And then the government will effectively fund you 80% of their salary, subject to a £2,500 a month limit. And they will also cover employers' national insurance as well on top of that. So there's sort of funding coming in to keep those in place.
Yeah, great. And obviously, guys, let us know if you've got any specific questions, but it does seem to be getting more and more documented. The key question that we've been asked on this, Ian, to preempt it, because a lot of people are asking this, is when will they get the money? So is the money going to get paid straight to the employees? Is it going to get paid straight to the business owner for distribution? And how do we go about applying for this?
Yeah, so great question. The scheme is that actually, whilst it's designed to support employees and keep them in employment, it's going to be paid out to employers, because actually that's less payments and less admin that the government needs to administer. So the scheme actually is due to be open. The portal is due to be open on Monday. So that's going to be open on Monday for you to be able to submit. Now, you do need access. If you're an employer, you need to make sure you've got access into the PAYE portal on the HMRC website. If you've got an accountant or somebody running your payroll on your behalf, you need to make sure that they're set up and they have access as well. because that process of getting access can take a number of days, potentially weeks at the moment, and that could obviously cause delays. They are talking about the timescale between applying and actually receiving payment being roughly 6 working days. So potentially it can be quite a quick process, but I imagine that first flurry of everybody applying on Monday is going to mean that the first payments might be a little bit more delayed than that.
Right. And then people are going to start screaming and to be able to pay people, etc. So, get your ducks in a row, I think, on that one. On that topic, this question has just come in. It's not the first on the list, but it's topical. So Alistair asks, is that 80% of their gross or net salary, and does it include NI, so national insurance?
Yep, so it is 80% of their gross salary, so you are going to get funding for the taxes elements. So it's 80% of that, but you will get the employer's NI element on top as well, unless that was subject to, if you've got the employment allowance, you're subject to that, then obviously there's a potential you're not going to get both lots of funding.
Yeah.
So.
Got it. Great. So, and just to underline this, guys, look, we're still seeing a lot of reports. I'm sure you're still seeing it, Ian, of people basically abusing the furloughing scheme. We went quite deep into that in the last webinar, so we won't go deep into this one. I think this conversation, we're going to talk more about CBILS, the Coronavirus Business Interruption Loan Scheme. But needless to say, follow the advice. This is, it's basically fraud if you are claiming for furloughed staff and they're not furloughed, etc. And rest assured, it won't be looked unlikely, and there's definitely going to be the fair share of people, I suspect, are going to get prosecuted for this as this passes through. And you reported last week, Ian, that the HMRC were recruiting and are recruiting for people just to make sure that these schemes aren't being abused. So, play by the rules, I think. So let's move on now to CBILS, Ian. So I think we touched on it, but what is the CBILS scheme? What are the governments offering? Why does it exist? And then we'll perhaps get into the nitty-gritty of application and what we think is working and what the banks are looking for and not. And I've got some really insider information, as it were, from some relatively high bank employees in a few different institutions that we'll get to. But let's start at the top. What is the CBILS scheme?
Okay, so the CBILS scheme effectively is still an application for loan from a banking institute. There's a list of 40 lenders. There are some traditional high street lenders in there, but the concept behind this is the government are basically backing this loan. So therefore that potentially should make the lending decision a little bit easier on the banks, because there's an element of security that's being added. So therefore should negate the requirements for personal guarantees and those sort of things up to certain limits. Yeah.
So it, now in practice, this is interesting. When this first came out.
Go on.
Oh, sorry, Ian. I think we had an internet interruption and we're getting a bit disrupted. But I think we're good again now. So let's see how we go. Worst case, we'll kill the video.
Yep, I think you're back.
Yeah. So the when this first came out, there was a lot of uproar about the personal guarantees, and now it seems that personal guarantees aren't required up to a loan of £250,000. Is that what you're seeing?
Yes, so that's very much what we're seeing as well. Threshold. So yeah, the banks originally were asking for those, I think on relatively low amounts. Now it seems to be the ones that we're seeing coming through as successful. There are no personal guarantees as long as those loans are less than 250,000.
So there are three questions or categories of questions. And again, you can comment in the chat box if you want to add to this. Well, for example, I'll throw it in here, Stuart's question, and then I'll kind of tie it into the kind of three most commonly asked questions. So Stuart just said, I applied for a £75,000 loan with Metro, and they're constantly putting up barriers. The last being, I put together a cash flow forecast and it wasn't showing enough deficit. They offered to extend our overdraft by 10,000. I was trying to keep figures conservative, blah, 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 blah. But I don't have a crystal ball anyway. It's impossible to predict. Yeah. So hearing a lot of things like this, Stuart. So there are three things perhaps we should talk about, Ian. The people are saying, where do I apply? The second question is what info how much to borrow, excuse me. So first is where do I apply? The second is how do I borrow, and how are banks assessing the loan size? And then what supporting evidence do I need to get accepted? And those three things are obviously interrelated, but they're perhaps three different topics. So I'll go first on the where to apply. So yeah, there's the 40 lenders, and it's well documented who the lenders are, even though there are some new ones that seem to be added. Because there's been such a swarm of applications, a lot of the banks seem to be only dealing with their own account holders first, albeit that seems to be slacking off now. So if you're listening to this, the first protocol probably is going to be your own bank. However, because there's such a queue and a backlog, it is worthwhile putting applications in with multiple banks. A little hack, if you like, that I've seen is that Starling Bank, which is a challenger bank, an app-based bank, you can have a business account open with them within an hour, all done from an app on your phone, and then you'll be an account holder, and they've just joined the CBIL scheme, as I understand it, very recently. So therefore, you'll be able to apply for loans with them. But there is a backlog, so you're in a queue, which is why having multiple applications in simultaneously is probably worthwhile. But what do you think, Ian? Is it worthwhile having multiple applications in? And what length of time are you seeing between application and being accepted or being rejected?
So I would say yes, definitely. I recommend supporting and getting applications in multiple different places. You've always got the option to say no if you get multiple offers, and it gives you options if you do get multiple offers. Certainly, it's the case. Yes, your existing bank. Certainly, in the earlier stages, from the people applying earlier, banks were only accepting applications from existing customers. Now they do seem to be opening the doors a bit more. So you do have, I suppose, a few more options if you think your current bank's not going to be successful. And time frame wise, originally we were seeing sort of delays, and they were sort of taking roughly 2, 3, 4 weeks. I'm seeing those decisions happening a lot quicker now. And they seem to have found methods where they can filter out people quite quickly and give them a decision and go, actually, yes, you look possible. And you can do that in a matter of hours or days. Or get a rejection quite quickly, and then therefore you can move on. So I think I'm seeing it improve and getting quicker decisions, even if not necessarily the decision you want, which is a yes, let's go and let's get on with things.
Very good. Yeah, I mean, in terms of which banks, for the record, this is all anecdotal, so don't you can't weigh too much. You can't put too much on this. But it seemed to me that the early movers, I was seeing people get accepted from Barclays and HSBC, and then subsequently NatWest or RBS seemed to be doing. The bank, the main high street bank that seemed to be very slow initially, at least, were Lloyds. But by the time people are even watching this recording, it seems that they're being caught up. I had a few contacts unsurprisingly, didn't want to be named, HSBC, pretty high up in the lending department. And the short answer was, nobody has a clue what's going on. No, like really, even within the bank. And what the point they were trying to make that I think a lot of businesses miss that are frustrated, and this probably transitions us, Ian, into talking about loan size and the documentation, how to argue the case for the bank, is they said, look, banks are conservative beasts by their very nature. And because the rates are so low, they're making very little money on these loans. So they're not focused on the fact that they're 80% back from the government. The banks are obsessed with the 20%. So they're all focused on making sure that they get the loan repaid. And I think a lot of customers are missing the fact that this is a loan. It's not if you've got the biggest sob story, you're going to get the money. It's you've got a good case for you are going to be successful in paying back this loan, because it's not going to take many people defaulting on these loans to wipe out all the profit the bank make on these loans, because they're not making any interest for the first year anyway. And so, yeah, we're definitely going to talk into the criteria as to what it seems like they're diagnosing with. But let's talk about loan size first of all. What are your thoughts? And I see a few questions coming in here from Mike and Mark, which I'm gonna loop in, guys. So stick with us. I'll get to your questions. What should you put into consideration for how much you should apply for, Ian? And then, or it might be a separate answer. What do the bank use to assess the loan size?
Yeah, so from my own perspective, I think it's important to have some degree of cash flow forecast. You need to have known or be able to demonstrate as well to the bank what were things going to look like if none of this had ever happened. How was everything going to be great for your business? How is it going to be pushing forward? And then secondly to that, be looking at a situation of going, okay, this is the worst case scenario of what we were looking at. So therefore now you've got another way you can demonstrate to the bank of going, look, this was the absolute terrible. This was the worst case scenario. And then finally, what have you done to fix that already? The bank don't want to see that actually the only thing you've done is just come to them and just go, no, I can't be bothered. I've been lazy. You just need to give me some money and that'll get us out of this. What have you done? What costs have you cut? What grants have you gone and applied for? Have you made your own staff furloughed to be able to protect that side of things? How have you shored up the business already? And then using that final cash flow forecast, now you can demonstrate and going, okay, but if we've got this additional funds available, this is now how we can grow and what we can develop and what we can do to help us come out the other side even stronger. And so overall, I think my view of what you should be doing and what the banks are looking for are probably quite similar. The banks are looking to see that you've been hit by this and it's causing difficulties. And how have you started to correct that? And what have you started to do to make it better in terms of moving forward?
Yeah, I agree 100%. And I'll use examples of a few of the loans of clients that have been accepted. It feels like an oxymoron at first for those listening, that in order to get C-bills, i.e. get this amazingly preferential loans at low rates, 3.5%, 4%, where there's no interest for 12 months, right? And often no capital repayments for the first 6 months. And then it's a 5-year loan. So it's an outrageously good loan that would have not been conceivable before. You need to demonstrate that the lockdown, etc., or the coronavirus is having a negative impact on your business. Otherwise, they just want to sell you regular loan products. But at the same time, as Ian just said, you need to demonstrate that this is fundamentally a good business, i.e. statutory accounts, etc. It was a good business and management accounts. It was a good business before, and you're projecting that it's going to get back to profitability. So you're right, Stuart, you don't have a crystal ball, but to a certain degree, you've got to do the dance with the bank. So so that's why the supporting evidence for cash flow forecast, it's a forecast. So ultimately, it's a spreadsheet which you've made up, right? But and I suspect the banker, in a lot of cases right now, because of volume, are almost box checking. Do you have the forecast? Has the owner put the forecast together? I've not heard of anybody, Ian, I don't know if you're any different. I've not heard of anybody being grilled on the specifics. It's very much are they fundamentally a good business, or were they creditworthy? Yes. Are they negatively impacted? Yes. And does the business owner have a vague plan based upon assumptions, the lockdown being 3 months, whatever, 6 months to get back to normal trading or whatever that might look like, that the bank can go, that makes sense. And therefore we're confident the business is going to repay the loan. That's what you've got to do. So we can bitch and moan all we want about the banks not wanting to make the loan, but the fact is they're kind of being forced into giving exceptionally good loans that they wouldn't have given otherwise. That doesn't mean they can just be dismissive and sign it off because it's 80% backed by the government, especially with no personal guarantees. So Mike asks an interesting question. Mike says, when applying for a loan, should we take into consideration investment funds for marketing, etc., opposed to just staying afloat?
So, yeah, my opinion is yes. We want to be demonstrating to the banks that that isn't just a case that all this is going to do is help your business just get through this, because are you going to make them nervous now? of how are you actually going to meet these repayments at a later date. That extra bit of, I don't know, 5, 10,000, whatever that you want to add onto the loan, actually, if that's going to make the difference that your business can now thrive as we come out the other side of this, that's going to give them more comfort to go, okay, we know we're in a bit of a, an awful situation and it's affecting lots of businesses, and we know that that's going to cause dips. But actually, if you've got the right level of investment, then actually the business is going to come out in a good place. So actually, I believe that's going to strengthen your position in terms of the banks looking on it favourably.
Yeah, I agree. I've cleared the person's message off screen, so I can't remember who that was now. It was Mike.
Mike, I think.
Yeah. So, I agree with Ian. Mike, I think that, put together your game plan. Right now, I'm not saying that you might take a slightly more pessimistic view in the short term to justify the need of the loan, possibly, and a good case for the business is going to bounce back in the long term. But fundamentally, we're not talking about making up stuff that's not true, but to be able to go to the bank and say, look, we are projecting that over the next 3 months, we're going to bleed £60,000 of cash. But to give us a bit of margin for error, we're applying for £100,000 C-bills loan. And we anticipate, it'll take us 6 months to get back to break even. And thereon afterwards, within 9 months, we're going to be back up to our pre-corona levels of revenue and profitability, et cetera, et cetera. That's the kind of thing that we're talking about that I believe the banks will be looking for. Certainly in all the ones that I've seen be approved and be accepted, that's always been the case. They've had reasonably strong accounts. So the example of the client that got approved for £950,000 cleared funds, Ian, it was from Barclays, if I'm remembering correctly, but it was a pretty big revenue business. It was low 8 figures revenue, and they didn't even require a personal guarantee. Now, I believe that's because he has a lot of property, etc., with the bank anyway, so he's got a really good relationship, and I suspect the bank knew that he wasn't going to leave because of the other lending, mortgages, etc., that are in place. But fundamentally, demonstrated profitable business, significantly negatively impacted in the short term. And I was going to go off tangentially, but let me move back to the question of how much to borrow. Look, the money's cheap. I'm in favour, as long as you're sensible with it, for applying for a little bit more than what you need for two reasons. One, it's an insurance policy, right? Borrowing slightly too less leaves you more likely to going broke than borrowing slightly too much. And think of the interest as an insurance policy. That's the insurance premium to hold that cash. I'm seeing the figures that I'm seeing getting approved are typically less than 25% of annual revenue. Or you could say, I'm not seeing anything be approved that's more than 4 times-ish annual profits. So on your last set of statutory accounts, 4 times your annual profit, I've not seen anything go above that figure. Not saying that it wouldn't, but it kind of makes sense, I think, if you're listening to this, that if the bank are looking for the loan to be repaid, the capital in 5 years, and you're not paying capital in the first 12 months or however it's structured, the business needs to have enough profit to do that. So that's 25% of revenue, below that figure, or kind of 4 times profit is kind of what the maximum that I've seen be approved. Ian, have you seen similar or different?
No. I've seen similar. Yeah, it's around that sort of levels. Yeah, banks are certainly looking for this and going, if you're going to be making repayments within that 5-6 year period, then yeah, you need to have the profits to be able to do that. And the best thing to go on is looking at what have you made historically. You might be great growth you're expecting, but how much of a dip has this really caused? And it's about people, I suppose, getting back to the level they were at before. The banks know that's potentially achievable. You've got accounts that have proved that. And yeah, I'd ultimately like to see that. That's what I've seen coming through as well.
Yeah, good. So somebody jumped on. I won't mention their name because they've mentioned figures, but somebody just jumped on, added a few additional points that they've got $1 million in revenue, 70,000 in profits, and therefore, if you think about those two criteria I gave, 25% of revenue will be 250,000, 4 times profit would be 280,000. So we're kind of in a not dissimilar ballpark. And also if the personal guarantee limit is 250,000, it's going to make sense to get below that. So for the businesses that are bigger, I would argue you're better off getting two non-personally guaranteed £250,000 loans from two different banks than having it all be with one bank. So I definitely think broadening out. Mark says Barclays are only now accepting applications if you've been turned down by your own bank and can give them the reason why you were rejected. Yeah, interesting. I did not know that, Mark. I think that I don't know. I'd still be inclined to agree and preemptively say that you've been turned down by your own bank, perhaps, and that's the entrepreneur in me. So that's not legal advice, because I strongly suspect, and I don't know, Ian, the rejections that I've seen, I haven't seen many. First of all, because a lot of people just seem to be being held and are in the queue, but while the bank figure out what they're going to do and process it. But I'm not. As with most loans, I'm not seeing many answers be given to the bank as to why they're being rejected. Are you?
No. I've like yourself. I've probably only seen 2, maybe 3 rejections, and from those, it's just been no. there is no reason behind it, and I think we're probably likely to be met with similar sort of reasons. If you try and ask for why you're rejected from a loan, most of the time you're going to hit a bit of a buffer and a bit of a dead end. And ultimately, it's down to the bank's lending decisions. And that's realistically what they've still got in place anyway. The banks still need to base all of these lending decisions on whatever their lending criteria are. It's just they've got a little element to take into account. I suppose the twofold side of things. One, it's 80% backed. But 2, they've only got the 20% in which to make any margins on. And can they cover costs and turn it into, if you like, a good business for them as a bank to make this work? So, no, I've not seen any reasons given behind rejections at all.
The one that I have seen, Ian, which is probably relevant and appropriate, is you don't need the money, you don't qualify for CBILS. And again, I'm going to give them an entrepreneurial answer here, guys. So use your own judgment as to whether you're comfortable with this, because you cannot lie on a loan application. That can get you in a world of trouble. So you don't want to do that. However, somebody that got turned down for the loan because the company was deemed by the bank to effectively have enough cash reserves, is what they pretty much said. So you can afford the bleed. Well, either this owner could have gone back with a more pessimistic view of how much cash they were going to need, I suppose, is one option, which is based on a forecast. So that's not lying. That's a statement of what you believe to be true and is intended. But the other factor that you might consider is the cash flow forecast is often of just that one main operating account. If you've got cash provisioned in another bank account for the business, then you're showing a cash flow forecast that's saying, right, our operating account is going to go to this from that. I would argue that they are just checking boxes, and if they see the deficit, they'll do it. You're not lying. You're giving them the operating cash flow from the business. I would be inclined to go down that route. And then equally, Ian, I don't know if you've got any opinions on this, and by the way, feel free to disagree with me. The business could, if it's got large capital reserves, could distribute those to the owner or make a director's loan and take it outside of the business, because these loans seem to be made at speed. And while your own bank will know if you've taken a big chunk of cash out of the business, perhaps, instinct tells me they're just going to look at it and say, they've got this much cash, they're going to bleed by this much cash, therefore they are vulnerable, we'll make the loan. Do you have any opinions on that?
Yeah, I think there's a good argument for it. I think if you're in a situation where you're going to need funds personally, if you're the owner of a business, you're going to need some degree of funds personally. There is no specialist scheme in place at all for you to be able to access borrowings from a personal perspective because you've been hit by the corona side of things. So actually, it's about looking at the schemes and the rules and things that are in place and interpreting and looking at them at a way that's to your own advantage. And as long as I think you still remain within the realms of the law and you still have a very sort of main ethical approach to that, then yeah, I think you should be putting your best position forward.
Yeah, I agree entirely. I agree entirely. So just to underscore, yeah, you do not want to lie. Don't lie. Whether it be the grants or the loans, it will come back in trouble. They'll pull the loans. You could get prosecuted. You don't want to play that game. But putting your best foot forward, so to speak, is worthwhile. Here's an interesting question that's coming from Alex, Ian. So Alex says, I'm a relatively new business, no submitted statutory accounts yet. For context, I believe Alex bought a business, but I presume bought the assets into a new limited company. How do you think the banks will view my situation when considering lending? The business was profitable up to the lockdown. Interesting question.
Okay, so let's look at 2 scenarios. So let's look at the case that there isn't the history available, and we can't do that. So this is a complete brand new business, and you have no statutory accounts. So the only thing you're likely to potentially have is some management accounts. I think that position is going to be a little bit more difficult. It's probably not going to be a no, but it's going to be you're at the back of the queue to some degree, because there's a bit more risk around this, particularly as management accounts won't have gone through as such a rigorous sign-off process as maybe the statutory accounts will have done. So the banks are going to take them, not as heavily as what they would do with the statutory accounts. So I wouldn't say it's going to be a no, but I'd certainly say it's going to hinder the progress you might be able to make. The flip side is actually if you have bought the business and it's got the history behind it, that actually there's a way that you can present that to the bank and go, look, this may not have been what was in my name, but this is what I bought, this was what I've inherited, and I've started to make improvements, and now here are the management accounts that show how that started to improve. And actually you can now put that forward, and whilst they might not be statutory accounts for that business, for your company, if you like, they are of that same business. So it's going to take a little bit of explanation behind it, but I think it would strengthen the position to be able to present those in that way.
Interesting. So a slightly different context. And by the way, guys, I know we're nearly out of time, but if there are any other questions, submit them now, and I'll do my best to squeeze in what I can. Just use the chat box inside of, the Q&A box inside of Zoom. Q&A box. I'll keep an eye on the chat box as well. Here was an interesting example, Ian. I was talking with a client who marketing agency significantly negatively disrupted because they specialized in consumer products, so retail. So a lot of their clients were cancelling with them, so they had a short-term problem, and they the last set of statutory accounts, whilst it was profitable, it was 12 months ago. It was April, I believe, 2019. And the bank was giving them a little bit of pushback on its management accounts, because their accounts the year before had been loss-making. So they were getting a little bit of, this isn't working. So my suggestion to them was shorten your year end. Because they had been profitable for the financial year, but it started going very negative in March, and now with April, it kind of wipes out most of the profit for the year. And my attitude was, well, if you shorten your year end to February, say, and then you put in it might only be a 9-10 month set of accounts, but a very profitable set, then you've got 2 sets of statutory accounts that are very profitable, and basically you're showing a big red splurge. Your P&Ls, I was going to use a crass metaphor. I won't use it there because I realised when I live webinar, you're showing a load of red ink in the current months because of the virus, and therefore will be eligible for the scheme. Do you think that's a worthwhile thing to do?
Yeah, I think it's certainly there's a good potential in it. I think depending on how much you're going to be shortening the sort of accounting period, one thing you have got to look at is you are going to be bringing forward when the tax is going to be due. So you need to take that into account in your cash flow forecast as well, and be looking at things. Okay, I predicted this tax bill was going to be due, I don't know, December time. Now we're going to be bringing it back and it's due, I don't know, August, September. How's that going to pan out? And actually, is that going to change the amount of funding that we're going to need? Right. Because we're going to need to be able to cover that. So I think potentially some good results. You just got to watch the other effects that may have as well.
Very good, very good. I like that a lot. Okay, good. I think we're nearly on 1:45, so we're just about out of time. Mabeen says, will you send us a recording in the webinar? Yes, I know at least in one place there was a problem with the link, so some people have not been able to get on. So we will send you the recording of the webinar, Naveen. So probably two quick questions before we'll wrap, Ian. Number one is there any, in this time of crisis and people are desperate and looking for funding and worried about cash flow and furloughing, etc., any key principles or words of wisdom, what you'd encourage the small business out there that are listening to this that they should be considering?
So I think overall, get yourself educated. Get on to, joining this webinar is a great example, but get and do others of these. Find out, you can make sure you've got good information, that you're not being sort of taken in by sort of news articles and media where there's potential that isn't quite as accurate as you'd like it to be. So make sure that you're getting educated. Apply for everything that you can possibly apply for. So if you're unsure, get in and make an application anyway. The worst you can get told is no, that you don't qualify. If you don't apply and you did qualify, well, you might be the point you miss out because you took too long. Find out what the banks are needing. So, we've said about cash flow forecasts, you need your statutory accounts, you need management accounts. Get on top of all those bits, make sure that they are as good as they can possibly be. You need to get your business as strong as they can possibly be from all those perspectives. So yeah, my bit would be, yes, get yourself educated, make yourself as strong as you can possibly be, and get applying for everything that you can possibly apply for that's going to support your business. But at the same time, taking into account if you've got loans, how are you going to be repaying those? It's not just an encouragement of just go get a loan. Make sure you can be meeting those repayments.
Yeah, I agree. And so for what it's worth, from me, I think that you need people listening to this need to view it as the long term. I do believe it's that while we're in turbulent times right now, this will pass and we will be in a very significant recession, very significant, which is a great time to be an entrepreneur if you're nimble and if you're quick. So Martin asks, is there a time scale? I presume he means to the C-bill loan scheme. We don't know. It's a bit like the furloughing is currently the end of May, but may get extended, may not. I strongly suspect the C-bill loan scheme will be extended. Doesn't have a close-off date on that, because the fact is, my personal opinion is that long after the medical side of this thing is under control, the economic impact is going to go on for many, many years. We've never seen this sharp downturn in global economics ever, arguably, or it's certainly up there with the 1930s. Now, we're a much more flexible as a society, and with technology means that the rebound is potentially going to be much quicker, which is great. And to tie back to Ian's point, it's time to get educated. The people that are struggling right now are the people that didn't, to quote my pal Warren Buffett, just for the record, he's not really my pal, I like his thinking a lot, that you only get to figure out who was skinny dipping when the tide goes out. And a lot of people are exposed right now, and that's not a judgment if your business is undercapitalized and you're exposed. But as you're getting through this, you've got to be laying the foundations. You've got to get a great accountant. You've got to get your internal financial processes in place, so you have this stuff, because the people who are getting approved and accepted are the people that know what to do, that have the data on hand, that can react accordingly. So Ian, if anybody wants to get in touch, or they don't feel like they're getting serviced by their current accountancy firm, how can they reach you?
So there's quick and easy methods to contact us on our website, which is www.mbsaccountants.co.uk. There's email access on there. You can book a call with me, and you can even send us Facebook messages. If you want to drop an email to me as well, it's Ian, that's just IAN, at mbsaccountants.co.uk. Great.
Thanks, Ian. So definitely check Ian out. And also, as a quick plug for myself, I mean, you can find me at danbradbury.com, but I'm currently recording a financial literacy type course on some kind of fundamentals. You still need professional advice. I'm definitely not an accountant, but understanding how this stuff works as business for business owners, that will be available soon. In fact, there will be a page going up, but just to preempt that, my new book, this was my previous book, Breeding Gazelles, my next book is now available on Amazon. It's called Turnover is Vanity, Profit is Sanity. And when a client was reading the first chapter last week, they were like, wow, that's prophetic. Because the first chapter, Ian, as I think you know, is all about risk mitigation. And the phrase is something like, things were going great, but when it turns downward, it can happen so fast, it can take your breath away. And so in many respects, it wasn't designed this way, but it's perfect for right now. So check out my latest book on Amazon, Turnover is Vanity, Profit is Sanity, where you can give yourself some reading while you're on lockdown. And for the people that get a copy of that book, I think we're going to give you a special treat in the form of this financial literacy course. So keep your eyes peeled. So Ian, once again, it's been informative. We'll get this recording out to you guys if you're on the webinar live, and obviously we'll post it out to the email list as well. Thank you for your questions. Just give them your website again if they want to get in touch.
Yep, so it's MBS, that's Mike Bravo Sierra, accountants.co.uk.
Perfect. Thanks, Ian. Thank you, everybody.
All right, cheers. Thank you, everybody.